Welcome back to Wealth Mastery USA. If you're new, the stock market can seem confusing. Let's simplify it. Step 1. What is the stock market? It's where people buy and sell company shares. Buying a stock means owning a small piece of that company. Some companies pay dividends, a share of profits. Dividends can be reinvested to grow your holdings over time. Step 2. Why invest? Historically, stocks return about 7 to 10% annually. Investing helps you beat inflation and grow wealth for retirement. The earlier you start, the more you benefit from compound growth. Even small monthly investments add up over time. Step 3. How to get started. Quick practical steps. Open a brokerage account. Popular options include Fidelity, Schwab, Robinhood, and others. Set your budget. Invest money you don't need right away. You can start with as little as $100 to $500. Learn the basics. Stocks mean ownership in one company. ETFs are baskets of many stocks. An S&P 500 ETF gives exposure to 500 large U.S. companies. Great for beginners. Decide your strategy. Keep it simple and consistent. Long-term buy and hold works well for most beginners. Consider dollar cost averaging. Invest a fixed amount each month. This reduces timing risk and keeps you consistent. Step 4. A few golden rules for beginners. Rule 1. Diversify. Don't put all your money in one stock. Rule 2. Avoid emotional trading. Markets fluctuate. Rule 3. Focus on long-term growth, not quick wins. Rule 4. Reinvest dividends to accelerate growth. Small choices add up over years. Step 5. Common mistakes to avoid. Mistake 1. Investing without research. Mistake 2. Chasing hot stocks or hype. Mistake 3. Borrowing to invest. Margin is risky. Mistake 4. Selling during a dip from panic. Stay patient and stick to your plan. Quick recap. What the market is, why to invest, how to start, and key rules. Open an account, start small, diversify, and stay consistent. Investing doesn't have to be complicated. Start small and stay consistent. Think long-term to build wealth. Have a question? Ask in the comments. Like, subscribe, and stay tuned for more investing tips. Thanks for watching. See you next time.